Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
All right. Hey. Welcome back to the Invested Dads Podcast, a podcast where we take you on a journey to better your financial future. Today, we are going to be talking about a trend that's been going on this year. And that trend is billionaires selling their company stock.
Wow. Talk about hashtag first world problems.
I know. It's like, I guess I
we're
need
in
a little bit of cash. I'm going to send $1 million. Give me $1 million.
Healthcare crisis, and I got to sell billions of stock.
Yeah, that's kind of how it goes. So yeah, you found an article which had some really eye-opening statistics.
Yep.
You want to walk through a couple things you found, and we'll link the article in the show notes.
Yes.
So if you want to check that out, click on the link.
Yeah. So Financial Advisors Magazine, which is something that I get.
I bet you'd
I'm
read
a financial advisor,
Yeah.
and it's a magazine. But they have online articles as well, and so we'll link it in the show notes. But they were referencing this trend this year, and it's not unusual for billionaires to sell stock on occasion, but they noticed that the trend this year is a little bit larger than they've seen in the past. So in the article, again, they reference that through the start of December. Wow, you just cracked your neck. Really, like,
if you guys heard that, that was my neck cracking.
So through the start of December, billionaires, and they're using the Bloomberg Billionaire Index for this.
First of all, zeros in a billionaire is 9.
Nine zeros.
Okay, that's a lot.
Yep, a lot of commas. So that they use the world's richest 500 people, Bloomberg Billionaire Index. So that's kind of what they're using as a reference. They've unloaded or sold $42.9 billion worth of stock this year to date.
That seems like a lot.
Yeah, that's really the first 11 months.
In case you guys were wondering, we're still in the growth phase of the Invested Dads podcast, but so at this point, Josh and I do not appear on the Bloomberg.
Yeah, we're not. We don't make
Index.
the top 500 yet.
Yeah,
but we're trying.
Yeah, we're trying.
But comparison, so 42.9 last year. So in 2020, the same kind of billionaire index. Now, probably not the same people. They probably move around every once in a while, up and
like
down.
Market cap, right?
Yeah, but 20.2 billion. So less than half of what they did this year. And so there's, again, noticeable change in what's happened.
Yeah.
One example, Mark Zuckerberg.
Marky Z.
Yeah. So, he owns that new company called Meta. Just straight Meta.
Meta Platforms.
Meta Platforms, which was Facebook.
It was Facebook. It still is Facebook to everyone's mind at this point.
Since May, he has been selling for a while, almost actually every day this year. Sold stock almost every trade day this year.
Yeah.
Part of that is, we'll talk about volume and trading, why you can't do it all in one day. The founders of Google have been doing that since May. 2 of the 3 Airbnb founders have diversified their stakes as well, which became publicly traded.
Yeah.
And so there's been a lot of that. Elon Musk is probably the one that maybe you've heard about, in that he asked on Twitter, hey, should I sell 10% of my holding? And Twitter said, sure. Not Twitter, the company, but people on Twitter said, yeah, do that.
It was a poll.
Yeah, he did a poll, and they said, yeah. So guess what he did? He started selling.
Well, the funny thing is that, let's take a tangent into Elon Musk world.
Yes.
He's a very eccentric, interesting gentleman who loves Twitter with a passion.
Yes.
If you've read, I'm not even going to go into all the details, but go read his interactions on Twitter with Elizabeth Warren and Bernie Sanders.
Yes.
Because they will crack you up so much. But anyway, so yes, he put this poll out there. The funny thing is, he had been planning to do this already. He just kind of wanted to make a big spectacle out of it and publicize it. But the way that Elon Musk is compensated is through stock and stock options specifically. So I think most of the way that his incentive plan is organized is that if the company stock hits certain levels, not necessarily company performance, but company stock hits certain levels, he is then given stock options to attain company stock at very low cost basis.
Yep.
So specifically what happened is that this year, I think a bunch of his options were coming to expire, so he had to exercise them. And the way that works is, say, okay, here's kind of rough real numbers. His stock option cost was $6 per share, and the stock was trading at 1,000. Okay, say something like that for round numbers. So that means that
6
he could,
is not really a round number, but go for it.
That's a real number.
Yeah.
So he could buy the stock for $6 per share, and then all of the gap between 6 and the strike price of 1,000 is profit for him, which is really good news. But essentially, he's buying stock that's worth $1,000 today for $6 a share.
Yep.
So like it's all profit and very little cost to do so, and then you obtain an obscene amount of stock.
Yep.
Well, he already has insane amounts of stock, the largest shareholder of the company, and the thing that people don't understand, I think, about the situation is that he specifically does not take a cash salary.
Yeah, it's like $1, right?
Yeah. So like, if he needs to A, fund SpaceX, because that's pretty much him, or B, go out to Starbucks, which I don't know if he's a big coffee drinker. He's a weird dude.
I had a joke about that he got really confused when he heard the adage, buy low, sell high. And after his podcast
with Joe Rogan,
he thought, I need to sell because I'm high. And that's what triggered this whole thing. But
that's
a whole
so funny. So yeah, so because of exercising these options, he was going to make a crap ton of money.
Yep.
Like bazillions,
Yep.
to put it in real world terms. How do you pay taxes when you don't take a salary? You have to sell some stock.
You need cash.
So Elon Musk this year is, yes, trimming down 10% of his Tesla stake. In doing so, also, he's incurring all of these tax bills by profiting on his options. But the only way to pay his world record, biggest tax bill in history, as he pointed out to Bernie Sanders and Elizabeth Warren recently, the way he's paying this is to sell stock, to get cash, to pay his big multi-billion-dollar tax bill.
Right. And by the way, this is the first time he's sold Tesla stock since 2016. So it's not like he does this every year. It's about $12.7 billion that he's sold this year. So yeah, there's a lot of reasons. You kind of hit on it. One of the main reasons we see that group of people liquidating some of their stock from the companies they either ran or started is that tax considerations.
Oh, yeah.
And so there's other reasons around, and we'll talk about, but the main reason is so far this year there's been talk about potentially adjusting the tax brackets and how taxes are counted and collected for high net worth people.
Yeah.
And so the House passed their version of the Build Back Better plan, which has not gone through both, but the House version had a millionaires surtax of 5% on income. Now, normally, like Elon Musk, his income is very little. He generates income only when he sells, and that's capital gains. Their income calculations, or what they counted as income, was a little different, so that they were trying to grab more of that at a higher tax rate. And people that had over $10 million got an additional 3%, so an 8% additional tax on top of whatever tax they're already paying for those above $25 million.
Yep.
So it moves up, so from $10 million you had 5%, another 3% for anything over $25 million. It's there. And so some of these billionaires are looking at it and saying, okay, I could save 8% if I do some stuff this year as opposed to waiting to potentially next year. Now, it's not a guarantee, but they're looking at that and saying, well, if I was thinking of doing it soon, why not do it now and maybe save 8%?
Right.
Because you say, well, 8%.
But 8% on
8% on $1 billion
it's a lot of money.
Again, there's a lot of zeros floating there, and it matters. So that's part of the reason they're doing it. And we're not here to get into the politics of whether that all makes sense or whether those certain taxes are there. But what we thought about is just this trend you see, and it's showing up in the news now, is going to cause some effects, and what are some of those consequences? So the first one is, how does this impact the market? And then second, how does this impact the everyday investor?
Right.
So let's start with the market.
So first of all, I think it's probably good to just remind ourselves the goal of investing.
Yes.
So what is the goal of investing? Where do you buy?
Yeah, you buy it low.
And what do you do?
You
what
hold
do you
it
sell?
until you need it.
Yeah, but when would you ideally sell?
Sell when it's up.
So you buy low and sell high.
Yep.
And where are the markets right now?
The markets are up.
The markets are up
All
really
close
big.
to all-time highs.
Not exactly, but really close to all-time highs at the time of this recording. So if you think about the last handful of years we've had in the stock market, 2020 being shockingly good considering how rough it was at one point, but 2019 was a good year. 2018 was a down year. 2019 was a good year. 2020 was a good year. 2021 is a really good year so far. Okay, so markets up.
Yep.
Markets have historically returned roughly 8% per year over the history of the S&P 500. We've gotten a decade, generally speaking, with a couple exceptions, but generally more than a decade of well above trend stock market performance. So stock markets are at all-time highs. a lot of these billionaires are seeing that the stock market being at all-time highs is a better time to sell some of their positions than it would be if the markets were down.
Yeah.
So taking tax into consideration, potential changes, and taking where the markets are into consideration at being really high, those are two tailwinds that are going to buoy these billionaires trying to maybe deconcentrate themselves, as we're going to talk about in a little bit. So in general, what does this do to the markets?
Yes.
Well, it kind of depends. So that's kind of the answer for everything.
That seems like a good answer.
But it depends on the position of the company. Like take Zuckerberg, for example, right? He's been consistently selling for a long time.
Yeah. So his goal, he has a charity. Him and his wife have a charity set up, and they've stated they hope to give about 99% of their wealth away during their lifetime.
Right.
So when you sell stock, you create tax. When you gift or give to charity, you can offset some of that as well.
Exactly.
So they're also strategically giving and selling together to minimize their overall tax burden.
Absolutely.
So if there's a year they're giving a bunch of money to charity, that's also a good year to realize some of those gains.
Yes.
And so you're also seeing that, as well as there's been some definite needs for charity, and some of their charities have been needing money to give out to everything going on. You know, the tornadoes that just happened a little while ago, everything with COVID. So their charities are being utilized. So they're saying, okay, hey, I want to add some more to the charity. Why don't I take advantage of this tax deduction and offset some gains I have? So you're also seeing them utilize that.
And so I guess if you think about some of these companies, a lot of the companies where these billionaires are selling stock are
large.
They're huge companies, and these people have either been with the company from creation or got in really early and have been leaders in the company for a long time. So they have massive positions in these companies. So if you take someone like Zuckerberg, they have been bleeding off shares consistently for a long time because they have so much, and because if they were to do anything drastic, it would actually move the market.
Yes.
If
Elon didn't say 10%, but he said 50%,
right,
that would have been a problem.
And if he did it all at once, it would be a problem. So
I'm selling tomorrow 10% of my stake.
Watch the tank.
Yes.
Watch the tank. So what is happening is that there are rules around market manipulation from the SEC, and we've had issues in the past, I'm thinking of like the 20s and 30s, where they have created the need for some of these rules. So some of these people have huge positions, and it is illegal to move the markets, and there are thresholds with which that you can measure that. So they're taking littler chunks here and there to spread out bigger chunks of dollars across a longer period of time to sell and get the money that they need to do whatever they want to do with it, whether that be pay taxes, do charitable things, have another business, or just live. So that is one thing, but a lot of these companies are so large that a leader, even Elon Musk, selling 10% of his stake in Tesla, which is the largest of anyone in the company, it's not enough to absolutely tank the stock.
Yeah.
Because, so, how stocks go up or how stocks go down is, are there more buyers than sellers? Well, if there are more buyers than sellers of a stock, the stock's going to go up because every single transaction is incrementally, more expensive.
There's more demand
until the demand tapers off, and then it goes the other way. As there's less and less demand, the stock price will go down. Well, as you're selling, the stock price is going down. Well, even throughout all of his selling, the stock hasn't really tanked. It's down a little bit. It's been volatile, but it was volatile anyway before that. So I think it's something to keep in mind that these companies are generally huge. And the market caps of these companies are so big that these billionaires liquidating many millions, at least, dollars of shares isn't moving the stock hardly at all.
And the other piece of it, too, is, they're not necessarily getting out of the market. They're getting out of a concentrated position. So for a lot of them, selling doesn't mean that they're holding cash or sitting on the sidelines.
Right.
That they're not saying, oh, the whole stock market is overbought and it's too expensive. They're just saying, I have a lot in this one company. I like the company, but man, I could probably do to get some out of there right now. And that's what they're doing.
And their position may have vastly grown faster than their other investments that they've had over time, which means that it could be, as a financial planner, we would say over-concentrated.
Yes.
You've got a lot of eggs in one basket. So if the one company where you're taking all of your benefits and your actual living expenses and everything from anyway, if that falls apart, then really like your whole financial picture is in a different situation. So it's just, I think, a little bit of prudent thinking. It's not necessarily what we're saying. I think it's not necessarily a warning sign that the market's going to fall apart. This is billionaires taking opportunities in terms of taxes and billionaires taking opportunities in terms of great markets to change what they're doing with their capital a little bit.
Right.
Take a little bit of risk off the table, perhaps. Give a little, those sort of things. So that's kind of where I think it is. I don't necessarily think it's like a red flag for the markets that these billionaires think the markets are going to tank. I think it's these billionaires are seeing some opportunity and they're taking a little bit of risk off the table.
Yeah.
That's kind of. I think it's smart.
Yes.
I'm not in the position to be liquidating multi-million-dollar positions in my thing, but I think I would probably,
if you were in their boat,
I would view it a little bit different, or I'd view it the same as they are.
Definitely.
So, Josh, I got a dad joke of the week.
Let's hear it. I need a good dad joke.
So, as we're sitting here recording this on a brand new computer of mine,
ooh, it's fancy.
I have a computer joke for you.
All right.
Why did the computer crack a joke?
I do not know. Why would it do
because it saw its motherboard. Its mother was bored.
Its mother was bored and needed to tell a joke. I like it. I like it.
There you go, Josh. That is the dad joke of the week. So I guess let's bring this home.
Yes.
So does this mean that listener Bob, Sue, any of these listeners, these are random names that just came in my head.
We probably have.
Hopefully we do. Hopefully we do.
Listener.
If not, share it with a Bob or a Sue.
Yeah, so they can listen to them personally.
To them personally. So should our listeners and us be selling because billionaires are selling stock right now?
Yeah, is this a sign that we need to be
is this like,
in? Should we jump in with them? Well, maybe. Like you said, it depends.
Oh, I love it.
And there's kind of 3 reasons why you may want to be selling along with the billionaires. 1, do you have a concentrated position? And, we're talking comparison. There are a lot of people who may have an over-concentrated position for their net worth because maybe they were really liking a company, or they also had stock options or grants or something. But even just something simply as Tesla, because we were talking about Elon Musk, that stock's done pretty well.
Yeah.
And your position may have grown if you held that to a point where you're like, it's bigger than I really wanted it to be. You're over-concentrated.
Yep.
So that might be a reason to sell. Do you need cash? That's one of the best reasons to sell, right?
That is one of the best reasons to sell.
Is I need cash for something. Or were you in a lockout period that you're now out of, and you say, okay, again, I need to diversify this that I'm now able to, and I wasn't before.
Dude, likely to company stock.
Right.
Plans.
So a good example, some of the other people that were noted in here is the founders of like Airbnb. They became publicly traded. They probably had a lockout period where they could not do anything. And then once that was done, they started to divest some of their original stock ownership. So those are some reasons why you may want to diversify, is the main one being, I just need cash, and that's fine. Yep. That's part of why investing is. At some point, you're growing this money to use the money. And if you have a need for the money, utilize it. Again, hopefully it fits in your plan and you've talked through with a financial advisor and you've kind of planned for this event. But that's the best reason to sell.
What we're saying is that this is not a leading indicator that we believe things are going to just fall apart because of billionaires unloading some company stock. It does not seem like that is the risk that we're facing at this point. What that would be is if people are reading into it saying that would be them trying to say, oh, this is some sort of market timing I can do. Yep. I'm going to get it at the top. And what do we know about market timing?
Market timing does not work.
It does not work. People, stop trying to do it.
Yep.
So, yes, do not try and time the market here. If you need cash because it's part of your financial plan and you were going to do it anyway, this is probably a good time to sell, especially because the market's up huge. If you don't need cash and you weren't planning on selling, don't take this as some sort of crystal ball to try and get some extra alpha, right?
Definitely.
So that is kind of where we're at. As always, check out our free gift to you. It's a brief list of 8 principles of timeless investing. These are overarching investment themes meant to keep you on track, to meet your long-term goals. And again, we're focusing long-term here. We are in this for the long haul, and we are hopefully going to help you guys along the way. So check that out. It is free on our website. Josh, how can people help us grow this podcast?
Yeah, make sure you subscribe. Always get our newest episode every Thursday. Leave us a review on Apple Podcast. Always good. If you have any ideas or thoughts or questions, shoot us an email at hello@theinvesteddads.com. We love hearing from you. And then if you know somebody who was asking about this or was talking about those billionaires, share this episode with them. Hopefully it'll be informative.
All right. Well, until next Thursday, have a great week.
All right. Talk to you later.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.